Hey everybody, welcome back to Growth 101. This module, we're going to really focus on financial and growth modeling. And I'm going to walk you through some of the core components of how I like to build a growth framework and a growth model. And we'll walk through this over the next couple of modules, actually. So we'll get through the financial piece during this session right now. Okay, so the growth framework, the overview here, really there are three main components that you want to think about when you're thinking about building a growth strategy for your startup, and every startup should have a growth strategy. The first is your financial model. The second is your growth model. And the third is your IO model. This is inputs, actions, and outcomes. And we'll look at each one of these in some amount of detail. But kind of the bottom of the pyramid here, your financial model is really, really important. And a lot of founders that I meet with, they have kind of skipped this step. Now, if you're trying to raise money, you'll probably have built some kind of model, but there's really no consistency among modeling in terms of what I've seen for financials for early stage startup and scale stage startup growth. So I kind of built my own. And this is what all of the launch accelerator companies and many, many founders are using now, is a variation of this exact formula that I'm going to give you starting today. So the financial model really lets you quantify all of the growth efforts across your company. And this is such a critical piece to understand because it really forms the basis of your growth model. Your growth model kind of extends your financial model by adding in things that impact your budget or your customer acquisition cost, and then most importantly, impact your growth rate. So how quickly are you growing over what period of time? And you're going to look at this basically every week or month. Back at the financial model, you're probably only really going to look at this when you're trying to adjust the model, which might be once a month or once a quarter or even once a year at scale, or anytime you're about to raise some financing. The last component is what I call your IO model. This takes inputs and actions that you're doing as a company and the outputs from those actions that really become the focus of your day-to-day work as a founder. And this is stuff that your team will work with. So this will span things like customer acquisition and activation, product-led growth, product development, and many other considerations. And so when we look at our financial model, we want to build something that we can basically anchor all of our future growth decisions off of. So how much money should I spend on employees and payroll and contractors and ad budgets against what revenue am I going to pull in from that spend, right? That's kind of what you're looking at. By setting your revenue targets early and really quantifying and understanding as a founder and a startup, what are my targets? What am I trying to do over the next 3 months, 6 months, 1 year, 3 years, 5 years? By doing that, you're going to form your high-level goals that you're eventually going to work towards. And so when you think about it, your activation strategy or your acquisition channels that you go after, they all need to support company growth. And you're going to back into this with your financial and your revenue models. There's a few steps here that I think you need to go through in order to really firmly understand your modeling. So every business needs revenue, obviously, to survive. And there's 4 components of a financial model that I like to look at. One is building a narrative. The second is revenue mapping. The third is unit economics. And the fourth are targets. If you look at it kind of in visual format here, you can see that, again, there's this kind of pyramid where the narrative forms the base. And at the top, you've got these targets that you're going after. This will make a lot more sense as I walk through it. But basically, your narrative is your stated goal. This is something that you should be able to rattle off to investors, to friends, to potential employees, to partners. So when I look at the narrative for Growth University, for example, my revenue goal over the next X number of years is to build a $10 million plus revenue business over 5 years. And my impact is that I want to be the leader in career development for early to mid-stage startups, right? Like that's my passion and I want to help startups grow. So this forms the basis of my narrative. So my full narrative would be my goal for Growth University is to reach 10 million in annual revenue in 5 years by scaling a membership community that helps startups grow faster, smarter. So really what I'm trying to do here is set a couple different goals while clearly articulating how to even talk about them out in the wild. Okay. And so when you think about it this way, Your revenue goal is monetary, your timeline goal is time, your impact is more of a social metric, and then your narrative kind of merges all of those together. Then you're going to run revenue mapping scenarios. So revenue mapping is going to force you to think about how you actually get to your goals and what those next couple of years are going to look like. And this enables you to basically model out different scenarios, whether you're going to raise money or bootstrap, for example, on how to get there, right? So again, these all work in parallel and they work linearly in that you want to form the foundation of this process first. So you map it. And we cover a lot more of this in the Mastering Growth Full program. There's a lot of kind of weedy details here that I'm just going to kind of quickly go through. But I just want you to understand the context of how we like to think about these models. Then you're going to work in unit economics. So by looking at unit economics now and early, you're going to get a sense of how many units basically you need to sell over what amount of time to reach your goals. And again, we're going to cover this in a lot more detail in Mastering Growth, the full program. Finally, you're going to set your targets. So you have to figure out how to quantify how to get started. Again, if you're a founder and you're about to hire a team or you're raising money, you have to understand roughly what your monetization is going to be and what your year one target is going to be so you can work backwards from there and raise the right amount of money and hire the right team members. So I like to start with a mid-range between what I think is super aggressive and what I think is not aggressive enough. So when I look at my 5-year plan of 10 million in revenue, I'm going to choose something that's modest, but I think achievable, aggressive, but not over the top aggressive. And that could work, assuming in my scenario that I've raised a little bit of capital. So my target for year one for my business is to do $500,000 in revenue. Okay, well, if my product costs $1,000, right? I need 500 units. I need to sell 500 units over that course of a year to figure out how to get to that 500K. So how are we going to do that, right? And again, we'll get into that during this course, the tactics and strategies around how to go and find customers. But it's critical that you actually can quantify the goal here, because if you don't know what the answer is to report back on in terms of what your target is, then you're not even going to understand where to really get started. And again, we cover a lot more of this in Mastering Growth. The next part is a little bit more actionable. So you're going to build your growth model. And so with growth modeling, once you understand what your 1 and 5 year revenue goals are going to be, then you can start to think about more short-term timing. And so our growth modeling, when we look at my 500K in year one, we now need to start asking ourselves, well, how are we going to get to 500K? I know I need to sell $1,000 unit 500 times. Well, how the heck am I actually going to do that? And so that's where you look at your growth model. So this is composed of a cost per unit. So again, in my case, it's $1,000 per unit, the number of units sold over some period of time, and your monthly growth rate. So how quickly are you growing compared to the previous month? That's month over month growth. It's one of the most common metrics that startup founders and investors are going to look at. Now, if you're running a subscription business, you're also going to look at the number of total active subscribers and the churn of some of those subscribers per unit of time, usually looked at on a monthly basis. So on the screen here is a year one target with a subscription model, assuming a 10% churn ratio. Okay, so you can replicate this on your own. If you're part of the Mastering Growth program, you get all of these spreadsheets and stuff included with the program. But basically, you want to model out your cost, your growth rate, your churn rate, the number of starting customers or subscribers you have to build your model upon, and then you run the model for the next 3 years. So if you're raising money or your plan is to raise money, you have to show something like this that you can credibly back into that says, okay, well, over the next 6 months, I'm going to be in growth mode using these channels. And in month 6, I'm looking at 62 new subscribers. By then I'll have 205 active subscribers paying me $29 a month. With the 10% churn, I'm going to be at close to $6,000 in monthly recurring revenue. And my marketing budget at that point needs to be $6,200 a month because it costs me $100 to get a customer, right? There's a lot going into this model. And again, we'll cover a lot of this in detail as we go, but this is the starting point. You have to get these basics down before you're ready to really move forward. When do you look at adjusting? So you'll adjust your model when you get new data back. and as you learn more about how your growth efforts are going. So when you run new campaigns or get a new cohort of customers in or churn a customer, that might give you some new data to use that you're going to plug back into your core growth model. Many, many, many factors will be at play here. So just use these models as a benchmark, right? When I'm running my startup, when I'm running Growth University, I have a model that we pitched and that I use to kind of keep me on track. And then I've got the reality, and the reality is what's happening in real life and impacting the business. And then I'll go back and I'll recast or readjust the model and then talk to the investors to make sure that they understand kind of what changes happen and why certain metrics are moving in certain ways with the business, right? This all starts from having that solid foundation.